Now that you've got the foundational knowledge of Roth versus pretax, let's build on that, shall we? By the way, if you don't know what I'm talking about, go ahead and click here first to see part 1. It's a quick watch, then come back so we can jump right in. Today, we'll answer what are contribution limits to 401ks and IRAs? Will my contributions reduce the taxes I owe? Will the income limits prevent me from reducing my tax bill? Are there any income limits that would prevent me from contributing at all? 401ks are a group plan held by your employer where you and your colleagues put money into the plan. IRAs, on the other hand, are individual accounts that are just yours. As a quick reminder, traditional IRAs hold pre-tax dollars and Roth IRAs hold after-tax dollars. Your 401k account is capable of holding pre-tax dollars as well as after-tax dollars, ergo Roth contributions. So first, what are the account contribution limits to IRAs and 401ks? For your 401k in 2024, you can contribute dollars on a pre-tax and or after-tax basis, ergo Roth contributions, of up to $23,000 for the year. If you're over 50, you can contribute an additional $7,500, which is called a catch-up contribution. Great. So, will my 401k contributions reduce the taxes I owe? For each year pre-tax dollars go into your 401k, it does reduce the taxes you owe for that year. But for after-tax dollars, ergo Roth contributions, it doesn't. Let's explain why. Uncle Sam each year looks at all the dollars he needs to tax you on. And when you put pre-tax dollars into your 401k account that year, it means you aren't planning on paying taxes on them yet because you intend to pay taxes on those dollars later on, when you take them out in retirement. Because of this, Uncle Sam needs to make sure he doesn't tax those dollars today, so he removes them from your taxable income for the year. You can see how he knows this on box 12 of your W-2. So as you can see, the net effect is pre-tax contribution dollars into your 401k reduces the taxes you owe that year. On the other hand, Roth contributions into your 401k don't work that way because you are paying taxes on them today. So you don't have to pay those taxes when you take them out in retirement. Okay, so will my IRA contributions reduce the taxes I owe too? For Roth IRAs, no. For the same reason it doesn't reduce your taxes for Roth 401k contributions. Uncle Sam needs to include your annual Roth dollar contributions in his calculation of your annual taxes because you're telling him you want to pay taxes on those dollars now instead of later. But for a traditional IRA, the answer is maybe. Why? It's pretty much an explanation you've probably heard before. The more money you make, the more Uncle Sam will tax you. Which brings me to our next question. Will the income limits prevent me from reducing my tax bill? Since we now know that only pre-tax accounts can possibly lower the taxes you owe, the answer for pre-tax dollars into your 401k is no, not ever. Because income limits don't apply. It's just the contribution limit that applies that we spoke about earlier. For traditional IRAs, as I mentioned before, income limits do apply when reducing your tax bill. For 2024, your deduction is reduced or phased out if your MAGI is between $77,000 and $87,000 if you're filing single, or between $123,000 and $143,000 if you're married filing joint. In other words, if you make less than these ranges, yes. If you make somewhere in the middle, partially with a phase-out calculation. If you make more than that, no. You can't use those pre-tax contributions to lower your tax bill because you make too much money. I know, that's a bummer. Which pains me to say there is technically one more income limit you should be aware of. So let's address the question, are there any income limits that would prevent me from contributing at all? The answer to this question is yes for only one account, which is a Roth IRA. And remember this, I am saying Roth IRA, not the Roth portion of your 401k. People confuse this sometimes. This only applies to a Roth IRA. For 2024, your contribution will be phased out or reduced below the account contribution limits if your MAGI is between $146,000 to $161,000 for filing single and $230,000 to $240,000 for married filing joint. If you make less than these ranges, you can fully contribute. If you make more, then you can't contribute at all. This is where a backdoor Roth comes into play. I'm not talking about that in this video, but we've got another video on backdoor Roths we're dropping in the coming days. So check out our page for a good explanation to how that works. Before I let you go, you may have noticed I didn't go through another decision-making process example of pretax versus Roth. That's because we've got a really good example of one that our financial planning director will run through with you in his upcoming video. Think 30-ish-year-old couple makes a lot of money. What kind of contributions should they make? Be on the lookout for when it drops, which means subscribe below with notifications on. In the meantime, you can always give us a call, email us, or visit our website. See you again soon.